Boom. And we're back. How's everybody doing? Sorry about that. Had a little technical drama there trying to start up. Let's see here. Still having some technical drama, to be honest with you. There you go. Alright. Holy shit. Love technology. How's everybody doing this morning? Mic check. 1, 2. Y'all hear me? Somebody wrote me a book right there. Certain specifics on some of the logic and terms are nebula reserved, so some things you find in there I won't explain on stream. I have too many trolls that look to steal my ideas, so there's certain things I don't put on the stream. Get to know us, get inside Telegram, and get us to our Discord, and we'll teach you some things. So let's see. And you're not going to find any books on my stuff. It's my stuff. So let's see. What do we got in here? Yeah, that Kimberly Clark, that was a pretty good one. KMB, that was a killer shout out on the show. See, that's what was a good community effort, right? That was one that wasn't on our radar, and somebody put it on there for us, so that was really cool. Let's see here. So the show is called History in the Making, and I want to talk about context throughout time. When we look back at history, the things that we remember and the way we deal with things in the moment. That's part of what makes playing trends so difficult, is that in hindsight the narratives of the time are missing. When you look back 10, 20 years, you don't remember the news and the climate of the day. And that's one of the biggest things that makes it really hard for people to navigate the real-time market. But lots of their models work so wonderful in hindsight, is that they don't realize just how affected they are by the news flow and the people around them who are entangled with the information that's all around you. So we're going to look at some more historical charts. I was trying to get a whole batch of these things up, and it crashed my shit. So I'm going to go with one of them that has a huge summary of news flow. I have news flow pretty much for the last 200 years that on markets, but that basket of charts, I couldn't get it to stay up while I was trying to stream it, so I'll have to try and figure that out and see what I can do in a future stream. But we're short on time, so I had to do that. Let me see if you guys got any questions down here before I get going. Thanks for the bits, Munir. Let's see. Everything is working. Okay, yep. All right. So let's go over here. This guy. Let's hope this thing doesn't freeze again. This thing's been crazy this morning. This is, just over 100 years of significant news stories tied to the Dow Jones and when they happened. And when you look at these bull run legs, like this movie you see from 1950, late 40s through the 60s, or the leg out of the 70s, from Nixon's lows out to where you are, the climate that the media helps to portray is what mindfucks people in the real-time moment. When we look at trends, they're not exactly rocket science. We look at bull flags, along the way of the trend structure, and they're pretty damn easy to define, as we've been doing, all year long for you guys. So what makes it so hard for technicians who understand price structures and breakouts and trend structure to follow the trend? And it is the mindfuckery of the news flow, and the fact that every single person you're touching is touching this information network that is fucking bending reality around you. So you really can't remain objective. It takes an utmost level of discipline to stay away from what the news flow does to you and let the charts do what they do. What we do in the show is look at the technicals. Regardless of what you believe about COVID or XYZ, you deal with price as it comes to you. And this is the kind of stuff in real time that will fuck everybody up. This one doesn't have all of the news I wanted to have on it, but it has some pretty interesting ones, in your big declines that you can look at. Is that as big as I can zoom in? Yeah, that is. and you look at like, the tops of your markets and stuff like that, like in the ditches, 25, 26, 27. Look, 1939, number 25, World War II begins. Just think of that headline. Who wants to invest in shit? Can you imagine if we said that today in 2020 with the heightened tensions that we have in the world with China and stuff like that? And we said that the U.S. is now entering a world war, or at this moment we hadn't entered it, but that there is a war, like, considered a world war erupting. Look where that is, right? 25, 26, 27, that's a fucking bull flag. That's exactly where it formed. But the psychology in this large-scale bull flag is literally getting rearranged. The levels of fear are escalating. By the time you get to 27, right, Pearl Harbor is literally is what drives you into the fucking lows. That is the best buying opportunity of that era and that generation. Who would really think that? But in the real-time moment, can you fucking imagine seeing fucking Pearl Harbor after you know that the world is engaged in a world war from 39 and now fucking the United States has been hit? You think you're running out to fucking buy shit? You're mind fucked. So the technicals of this go out the window for anybody who was a technician. Not that they were like, notorious technicians back here with any, charting and stuff like we have today. But it's what the news flow along the price structure that's really absent that a lot of technicians lose out on. As a pure price technician, you shouldn't be considering any of this. I blend my own version of fundamentals or fundamentals, by looking at the way people believe information about them. Again, we don't trade the news. We trade what the news does to people's perception of information. That's what you make money on, right? The arbitrage of perception. What people end up believing about reality and what fucking reality actually is the differential between that is where we make money as speculators. So when we look at something like this, right, you look at the news flow, we can look at this trend, and every idiot here, who's a rookie at looking at charts can say, oh, I know where the breakout is above this 25-year line and breaks out there, and I know the breakout is across this 70s area, and there's a trend. But in the real-time moment, you can't think. And why you can't think is really not well understood. But you're inundated with information that everybody's party to that gives you, like, portions of the total picture. And that's where the bias train comes, where everybody ends up with like one idea out of a body of information that really you're not fully valuing. So I want you to look at this stuff, like, look at what happened along the price structure. This gives context to price. The story that's missing in the technical structure that allowed so many people to like let such opportunities leave them is very, very poorly understood. This is a good chart. I wish I had the other ones because I have way more detailed news stories that are in a finer resolution in between some of these that show you some even crazier shit, and going back into like before 1915 also. So hopefully I can figure that out by the next one. But I thought this was a pretty cool chart for us to look at today. So let's look at some of the stuff when you're like, getting your first structures out of the trench, right? 28, 29, 30, 31, let's see what those are. Price controls begin, Battle of Midway. Just think of these news stories. I guess most people are on like radio shows and shit, and some people have black and white TVs, but 30, 29, Current Tax Payment Act, withholding taxes. Normandy invasion happens at 30. So as you're pumping out of the trenches of where the war started, like you're invading Normandy, which is like one of the worst fucking battles ever. 31, World War II ends, right? And someone here is the nuclear explosion in Hiroshima. I believe it's this month is the anniversary. If I'm not mistaken, it might be today. Is the nuclear bomb getting dropped or something like that? I think somewhere in here there is a nuclear weapon being dropped on a civilian population. There's like Armageddon around the world, and it is the best buying opportunity available to you in this generation since the crash of 29. So this entire pump takes place. We look at 34 through 35, 36. Where are we at? Yeah, you can know it's like really difficult to read through this fucking mask. Hold on. 34. Truman upsets Dewey for president. So I guess Truman was the underdog. He takes the presidency. You even think of that. If Truman is an upset, the way this news story reads, then that's kind of like the probably the narrative similar to like Trump selling that if Biden gets in, the economy goes to hell. You don't want that guy, and he comes up and upsets the incumbent anyway, or not the incumbent, but he upsets the likely favorite, and you get a president that most people likely aren't thinking should have been the president, and that's a key point also. 34 is literally a fucking like launch directly out of this consolidation of post World War II. So you're seeing the headlines say you've got a surprise president, and it's a perfect moment to buy that uncertainty. Again, like the worst, news stories that would be received negatively are mind fucking people at technically the best places. And this is not mutually exclusive. The price chart, if you think about it, few people make money in markets. So then that means that most people have the wrong idea at all times along the price chart. And this is kind of giving you an idea, right? Not only do you have a surprise president, but who knows what the fuck else is going on economically, geopolitically, and relative value-wise in the country to say that this one news story matters. But it's obviously a news story at the time that would really matter and draw a lot of people's attentions and draw them away from the total picture of what would give you a more accurate valuation of what was likely the true picture of the market. So stuff like this, is interesting to see the way they've done it. Look, 36. On your way out of the breakout of the highs of 22 and 31, you get the fucking beginning of the Korean War. Another great reason not to touch shit. And fucking kaboom. So you literally fucking rip from the minute you get hit in Pearl Harbor through the fucking Korean War as surprise president, and this entire bull leg is built of uncertainty. That's the same thing as Obama, right? Obama was built of massive uncertainty and QE and XYZ, banking crisis, who knows, he doesn't know what he's doing, he's Satan, blah, 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 blah. And the same thing here is also true. Now, in hindsight, they can sell you the news that fucking everyone loved Reagan. But Reagan, when he came into office, was considered like a Trump. He's a B-list actor coming into the market after fucking like stagflation. He's not exactly viewed favorably in his original time in the market. It's only after the economic run of the 80s that you look back and say, oh yeah, Reaganomics is fucking this, that, and the other. But there was no Reaganomics to be understood at the initial point he entered the market. There was only massive, massive uncertainty. Let's see what news stories we have at 68. Let's see, 67, 68, and 69. Let's see where we are for those, if we have anything interesting there. 67, tax cuts passed, space shuttle, President Reagan equal shot. Don't know what that means. 66, Iraq invades Iran. That's 66. Where's 66? That's over here. And then Penn Square Bank closes by regulators. Nothing really crazy they have on the list of news stories here. Terrorist bombing of the U.S. barracks, Beirut. It's interesting. Beirut just blew up last night. I don't know if you guys saw that shit. That was pretty much the craziest thing on video. The shockwave that came out of that blast in Beirut. So they don't have I don't have great news stories along this part of the chart, but when Reagan comes into office, there's not a lot of fanfare about him and what he's going to do. But ultimately, when you look back in hindsight, you hear Reaganomics, and you have to understand in the real-time moment of Reaganomics, it was not exactly understood what was going on. That his massive spending on Star Wars projects would drive the semiconductor revolution that would ultimately lead to the internet revolution. So the real-time valuation of information is difficult, and the fact that you don't have access to all of it that you think you do, to have an accurate valuation is dangerous. That's why following the price structure can be so much better an idea, because good technicals will put you in the same place as good fundamentals, even if you don't have access to all of them. And that's the danger, right? Thinking you have access that this one news story trumps all other fucking qualitative information out there. So this is something I wanted to go over with you guys and just look at. I thought it was pretty interesting to look at it. The way this is laid out along the price chart, it's pretty fascinating. I'll post this thing on Facebook and Instagram after the show for you guys if you want to grab it. Hopefully the resolution is not unreadable when I post it. But I'll throw this guy up as something for you to grab and hold on to and look at. And it's really cool to study this and look at the history of our history on a graph of price. And this is this is what guided the belief structure of many of the investors who would have missed the greatest opportunities of each leg and lifetime, in each era. So 60, I think that's where Nixon goes, right? President Nixon resigns, right? So that red dip, the best spot to buy in the 70s, is where Nixon goes out of office. It mind fucks everybody. Kind of getting hit in Pearl Harbor. There's not a reason you're going to buy. It's the president of the United States is gone, so fuck it, I'm going to buy stocks. Nobody would do that, and that's exactly why it's a good idea. So yeah. Okay, I'm done doing that. I beat it to death. Cool shit, right? So let me see what you guys have in chat. History in the making. Now you get that idea. Let's see. Okay, let me scroll back up to where this was. Damn, Patch Donut subs. Appreciate you. So for anybody who's here, you can always watch the show without being subscribed. Subs allow you to go back and review it, because we do pack a lot of information into the hour that we have. So you may not catch it all the first time. It can be a good idea to take a look again. All right, let me scroll from catching back up to where you guys are. So this lesson here is be careful what news can do to your mind, you know, especially when you end up thinking the news that you've got specifically is the most important thing in the world. There can be so much information you don't have access to, and the people who have access to great information are the people who are influencing the price. So paying attention to the price can lead you to fundamentals you don't necessarily, you know, have in front of your face, but have located nevertheless through price. Can you share that chart with us in Telegram? Yeah. I tell you, I'll put it up for you guys to get. Actually, the resolution of the thing, if I post it on Instagram, I know the text will be pretty much unreadable because it's barely readable right now on the computer, and I know it downscales it. So hit the Telegram link and I'll throw it in there and you can grab it. I'll try to post it on social, but I know pretty much the text looks so grainy right now, it'll turn into shit once it goes through there. So I'll get it out for you guys. But yeah, it's a really cool chart that actually comes from another trader on TradingView. So I didn't create this. This actually created Trader Excavo. I don't take credit for other people's work. So this is actually created by a trader that I follow on TradingView, and it's a really badass chart to kind of add context to history. So I thought it was pretty awesome. I saved it. But yeah, this is the trader who actually created it. So hats off to him for doing that. Let's see. All right. Patch, much appreciated on all them subs. Hope you guys enjoy using them. And mother of sub gifts, okay. Let's see. Catching up. Can you explain implied volatility in options and how it can fuck you? How to avoid premiums in options, I don't fully understand. And then make options trading for me pretty irrational. Man, there's not really a way to cram an implied volatility course into an hour show. Options themselves are their own kind of course on their own. You know, instead of like training people professionally to trade, an options like course itself is its own damn thing. But you really need to understand the mechanics of price. The one thing I'll tell you is this: that like IV is very cyclical. Implied volatility, like, you know, is basically about looking forward out at expectations that you can calculate from the premiums of your options. Generally, when you're dealing with individual stocks, your greatest risk in getting what's called an implied volatility crush is getting near earnings. Your earnings are your greatest unknown generally, and the greater the dispersion between your analysts and like what earnings could potentially be is generally the more exacerbated your implied volatility situation will get. If you buy options, if you buy call options or even put options, right, speculating on a giant pump or dump, which a lot of people do, not understanding options very well, and the options fairly price in the expectation that's tied to the event, then the option will have swollen to a premium that reflects the movement of the event when it happens, the event risk. And if that happens, you can get the direction right, but the volatility collapse will collapse the premium of your option and fuck you even getting the direction right anyway. So you have to understand some things about like IV beyond what I just explained, but that's generally how people get fucked. And you're like, well, I got the direction right, but my option actually went down. Is that you got hit by an implied volatility crush after the event was known. And that's, like I said, that can become so complicated, most of my viewers won't know what the fuck I'm talking about. So for more nuanced things like that, get in Telegram, get your team structured and things like that. I teach things like that, but long after you understand price dynamics and such. Gold in them old streams. Sorry, I just read that out loud. Bombs were dropped August 6th, August 9th, right. So yeah, so Hiroshima, right, the anniversary of the nukes is like right now. Today and then in 3 days. So the market literally is tearing ass while nuclear weapons are being deployed. In the 1940s, when you have to think like what our thought process with sci-fis and all our special effects let us visualize about like weapons and future tech and shit like that. In the 1940s, I would have to imagine that the visual of a nuclear weapon detonation would look like the end of the world, relative to the technological curve of the time. It wouldn't be the way you and I perceive it today. Like a nuclear weapon going off would be a very new thing, and holy fucking Christ, there's something that powerful humans made. It just would be perceived at a whole another level, and a whole another level of fear would be tied to such a thing. Yeah, Reagan was shot by McKinley. That's in 81, and that's not on here. The other charts I have actually have that event. They have sorry, Hinckley. I said McKinley. McKinley was assassinated. I have that on another news chart also back when that happened to him. But right, Hinckley shoots Reagan in 81, and let me look on there if I have. Don't really have the resolution to see it, but it's really like a non-event in the price chart, which, you know, a massive bull run comes out of the markets thereafter. All right, so let's see. Great insight shares. Let's see. I'm catching up. When shitcoin baskets. Like we've talked about, you know, shitcoins and like some of the runners that are in there, some of the leadership positions in shitcoin land. I haven't put that up because it really wasn't necessary. Like we explained, you know, that you're looking to be a little bit more selective in this cycle. People who are cheering like EOS and looking for that, you know, we're chasing like the laggards in the marketplace rather than looking at the leaders, like Link and stuff like that. So I haven't put those up. I'll do a shitcoin more centric show, and I'll prep for that, and I'll get you guys some baskets if you're dying to see that. QZ Dub, appreciate the bits, Chief. Interesting that the COVID dump is just a blip in the big ass chart. Right. Look at how many news stories are really just blips in a 100-year chart. That's the point of showing you this. Like, you know, stories that are stories that are far more moving, you know, in history, like fucking going to World War and shit like that, are blips on the radar. Losing a president in the 70s is a blip on the radar. You know, the situation in the banking crisis is a blip on the radar. And yeah, when you look at what COVID is a fucking really just a blip on the radar out of so many things. You know, the Spanish flu is back here. Did they have the Spanish flu numbered in here? Let me look. Number, here, we'll go back there real quick, one sec. Let me zoom in there a sec. Oh, don't be weird. Zoom in. So let's look at the early stuff on here. What's in here? 1, 2, 3, 4, 5, and 6 are the Lusitania sunk by a German submarine, which is, you know, said basically like a false flag, putting weapons on that the Germans sunk, which kind of led us into World War One. It was basically supposedly baited that this boat was a civilian boat full of weapons, and the Germans warned them if you sailed it into their waters, they'd sink it, and they did. And that gave the rationale for the U.S. to be involved. So 1917, the U.S. formally declares war on Germany. So that's number 3. So right here, so you pump into the declaration of war, and the world is like at war already. World War One's ongoing when you enter it here, and you get to think like the market is actually running during another world war, much like fucking what's going on over here. 4, 5, and 6, World War ends, daylight saving times. 18th Amendment prohibition ratified, and they don't have anything for the Spanish flu I see here. But the Spanish flu is going on pretty much like 1917, right when we entered the war, 18 through 20. The Spanish flu is kind of in this red range, which leads us directly into the roaring 20s. So if you think that's kind of what I talked about, right? If this is anything like that, that leads to this arc, and this is like Black Monday 2, which Black Monday is over here at 72 and 73, and this arc is the back end of like the arc from here, from 74, then this is the space cash arc fractal. That is what I'm predicting here, is that the arc that leads out to extend leg 3 from the correction of COVID, or Black Monday 2, is going to be the arc like with the bulk of the real technological like gains for us in society, which is us going off world, the United States now admitting their spaceships from other places. Like you're getting a cultural shift right now that's happening under the guise of COVID, that's making most people not really pay attention and value this. But behind the fucking arc, after fucking Spanish flu, Black Monday, and what I call Black Monday 2, which is basically the Spanish flu meets fucking Black Monday, the next leg of this that now has enough negative, you know, sentiments built into the market to allow it to arc, is likely the real fucking technological gains from the tip of the spear of 2009 through, much like it was from the tip of the spear of 74. The real technological booms that we remember is coming out of the fucking 90s into fucking 2000. So the real crazy shit is yet to really happen in what, you know, what it appears to me. And that's the same thing too, from 74 to where you get to Black Monday, right? It's nothing compared to what the fuck emerges post Black Monday into fucking 2000. So that's where I think we are. We're in a situation like that, and you have like a fractally similar arc that you see here from the Spanish flu, from Black Monday, and from our COVID pandemic, quite likely in a fractally similar place along the way. That was wordy, but you get the idea. So what am I at time-wise? 8:35. Nope, that's the wrong one. So I did have some crypto stuff up, and the basket list that everyone asked me about just a moment ago. And I put this guy up, just kind of looking at him side by side with the LTC winter chart. I told you guys that this is the original LTC winter layout. I've drawn all over this motherfucker now, so that looks ridiculous, but so the similarities of this guy, although LTC was able to make it back and test the this is where you care bubble, right, the bull flag in the recovery from the crash of the internet bubble, Qualcomm never came back to test that. But even still, there is still structural similarities to what you see here. The retest itself, if it's anything like what would have ultimately been the stop run of this range, that guy right there that kicks everybody out before you can actually go to new levels is likely the stop run climax down here. It's vaguely there, but coming out of the bull flag right now, if he's got a chance to actually begin a trend to take him up to challenge the highs of this is the best situation for it, given the breadth of the market in crypto land. So kind of just looking at that, it's not like a great fractal comparison. You look at the low here that I've marked, the higher floor is here. It could be kind of akin to the rising structure that led out of this, but take this with a grain of salt. If the entire cycle, one thing people look at the crash cycle, they look at the crash cycle, the climax and the dump, but the price structures that we regard as the crash cycle have a story beyond the part that we screen grab and say we like this part of the chart, right? What happens after the crash cycle? It recovers into an even bigger structure. And so this is the full unfolding of the crash cycle. It's a fractal that can be woven to larger, smaller versions of itself. All right, all there really is the crash cycle. So when we look at this could likely be at a smaller resolution for a much bigger resolution version of the same thing happening yet again. If there is going to be a resurgence in the marketplace, it comes after everybody from the previous cycle is fucking dead. And crypto's corrected for a significant amount of time from the peak here. If you really think about the bear market, it's gone, typical bear market. Most people thought the crypto cycle would be faster, but this really looks like for shitcoins, namely Litecoin and guys correlated to this in the dollar market, this looks like a typical bear market lasting nearly 3 years, 2.5 to 3 years. So worth keeping an eye on, right? We said crypto had started to improve in health, and there was some leadership from bigger names like Link and stuff this cycle. But I do always like to look at Litecoin because he's kind of he is like the silver of Bitcoin psychologically for older crypto people. So there is still sentiment reads to be gained from watching Litecoin, even if he doesn't have the leadership position he had before. So what just happened there? So we'll cover crypto really quick, and then we'll go look back at some stocks and stuff. What did I just do? Not wrong chart. Oh well, let's use this. We mentioned Ether last time. He's running much differently than Tezos, and this has to do with the Uniswap deal that basically created a BNB type situation that's forcing fucking people through Ether to get to Uniswap. So it's just another crypto pump, but the fundamentals change the dynamic of Ether's relationship with Tezos at the moment. And so for as long as this game works, they've created a pump dynamic for Ether to basically force fucking velocity of capital through its ledger. So Ether, it looks pretty crazy and it's been pushing. We looked at him on the last show probably about, I think, 13 points ago. And so this guy is obviously much stronger out of the base than say Litecoin. Litecoin doesn't look like this at all yet. He hasn't pushed nearly like that, right? He's lagging the highs out of the trench. Same thing with EOS, right? He's not the strength, but Ether is taking a leadership position right now that's worth paying attention to. BNB, has also kind of has a pump dynamic to basically enter the market through there into shitcoin land, and play on Binance, he doesn't look as healthy as Ether. Ether is the hot guy in town right now. But structurally, these guys are all blowing out similar fucking bull flags, that are pretty well correlated. So they all are worth paying attention to. I see some dumb money that's finding their way into things like XRP, and we did look at this guy. Right, we still say he still has to take out the highs that set the low. So for now, he's having a great bounce within this price range. He's obviously bouncing, fucking 10 cents to 30 cents is a pretty significant move. But he still has to basically take this level out before you really want to say that he has a chance to go fully fucking crazy. LTC, sorry, not these guys. These ratios are always worth watching to kind of get a gauge on strength of shitcoin land versus BTC. This is why we keep track of them. Looking at this guy, right? Link's a monster, and as long as he's holding his structure, he should never be taken off your radar. Link Army is stronger than XRP Army. ETH BTC representing this Uniswap deal, it's fucking bull crazy on Bitcoin. And so we've shown you this before. I said this guy broke out. He's worth keeping on your radar, and he's proving that true. Running into an area of some congestion that's probably worth paying attention to is he's like a stick running into it. But again, his trend structure is good coming out of the gutter. So definitely worth still paying attention to what's going on with guys like this and any of your other big name crypto guys. So that's pretty much it. It's kind of the same thing we've talked about. There's nothing really to add to this picture. Let me check if you guys have any other questions. Shout out for the bits, Bob Deck. Appreciate you. We can even think that this COVID era can be the best opportunity to buy. In hindsight is where you're going to be able to figure that out. What you do know is COVID is not the entire story. When you look at some of the headlines I showed you, like you can see like the headline that could basically tie up a year worth of like print, but it's not the only thing going on in the world. Can you post the Telegram link again? Yeah, I'll post it before the show's done. Let's see. Euro USD. I can take a look at currency. Can I break down Kimberly Clark? Yeah, I mean, I drew it up for you. Somebody here flagged it. I didn't have that guy on my radar. So it's also people in the ecosystem played it. I'll take a look at it again. Yeah, I think everything I annotate on here is still on here. It's the same chart I use for every show. So we'll pull up Kimberly Clark and Euro USD. Real Don, appreciate the bits, and you're welcome for the historic context. Sunseco, thank you as also. Drew, what up? Good morning. Thanks for the bits, Chief. You said, yeah, it was Zoom called wars equal pump and growth. Well, one thing's for sure, war equals like massive uncertainty, and massive uncertainty is generated by fear. And once there's presence of fear in the marketplace, then that's an emotion. And if the consensus is an emotional state, then we know emotions misprice reality. So that's kind of like when you really want to interpret what the news does to people, it moves you away from logic and it instills fear. So the greater the levels of emotional distortion in the populace, is likely the greater chance there's an opportunity sitting in front of them they no longer can see because of that distortion caused by that biased lens. So that's when I say you don't trade the news, you trade what the news does to people. Fix Mageddon. Yeah. Let's see. Death of Humans, Rise of AI. Damn it, Burger. That's for a Spacecast show. We'll have to talk about that there. Burger's gonna have to come help me do Spacecast because that's gonna require some serious context. Yeah, he's always on the Death of Humans, trust me. He's trying to code the AI that's going to take us out. That kid's crazy. Smart enough to do it too. Will LTC follow the Qualcomm path? Not going to tell you that it has to, but kind of looking at like, once we look at the crash cycle and we look at like what follows in the future, right? Like many people don't realize that the Cisco is the crash cycle chart that you all know as the emotion chart. And Cisco's still alive. So if you thought about it, like, there's more story for what happens to Cisco after the part that you've screen grabbed as the emotion cycle. Like that story's still unfolding, and the human beings who made the emotion cycle in Cisco are still party to the forward story. So you can't leave that out because that also makes you think that that's all there is. But what you're looking at is that Qualcomm has a chance to roll into a larger version of the exact same thing, or not at all. But that has to be allowed to unfold to see what it does. All right, let's see. All right, catching up. Siri looks like a hidden bull market on my blog. We can take a look at that one. See, I like that you guys flag this stuff. It helps us look around, GDX, yeah, we'll definitely talk about that. So, alright, before I get too many symbols that I can't keep track of in my head, let me go back. So, where is it? There it goes. So, what was the first one? See that shit? Somebody asked me for Euro USD. Before I go too fucking far, let me just go and order what you just said. And Kimberly Clark, somebody asked me to look at that again too. Shit, I already forgot. I've been up for hours. I should be like fucking sharp as a tack. So, Euro USD deflected on that zone that we talked about, but it's still an area. Like once you have like major areas, there is usually a chop shot that will go on. It'll kill everybody involved. But we got a good reaction that we're able to fucking pay attention to. Ultimately, gold is still moving, right? And gold is moving because he's stronger than the dollar. The dollar may have had a reaction where he got stronger than some currencies, but in the commodities market, like, gold is still pushing. So there is an undercurrent of a weaker dollar, which is part of the trend structure we see in the euro, right? This euro run is also tied directly to the movement that we see in gold. So if we like overlay that onto here, there it is. I probably should have used the XAU USD thing, but whatever, this should be fine. Damn it. Knew that. Alright, I'm going to zoom into the crash part. I knew it was going to do some shit like that. Hold on. I did something with these encoders on this fucking thing because it was causing me havoc, and it does seem to be allowing my chart to work better in the stream. This thing's so fucking complicated streaming. I need an IT guy for this. So like, I wanted to show you that the move from the trench lows against the dollar is like, in multiple assets. It's in the currency market and it's in the commodities market. So the dollar in the larger time scale is obviously weak. So, gold and all these things are reflecting that. As long as gold's trend structure, which we talked about from, months ago, likely targeting 2400 or above, as long as the trend structure this remains intact, then, the basket of assets moving against the dollar likely are going to stay fairly correlated. So the euro, as much as it reacted off that area and it was a good confluence across the basket, is not the death of a trend. We don't ever want to do that and try to call tops. That's a more dangerous thing to do. But it was an interruption in the trend structure at a key level. It can make a bull flag structure here and it can progress. As long as this gold keeps pushing, right, that is likely a danger for the dollar in the currency markets. Now, he could gain some strength in gold outright, just outclass all currencies and push it harder against euros or pounds. But for right now, we have a basket move that we can see clearly is showing here in euro dollar. And the other currency we used to keep track of this also was the Aussie. So let's look at the three that we'd use. We looked at the US dollar franc that day, Aussie, and AUD/USD. And so they're really just, it was an oscillation, but again, right, that was our layout for us clearing the highs pre-COVID dump, coming into that was the end of the year actually, right? That was the high at the end of the year, rolling to the COVID sell-off. So structurally, we got a shock wave. He never broke lows. He broke above it, and this is also correlated to the gold move and the risk-on move that we're seeing in markets. So structurally, still looks fine. We had a reaction that showed up here from that USD CHF level we drawn in also. And so you're still on it. So this level needs to be cleared fully before you go, oh, FOMO. Like we talked about, when levels are getting chopped apart, you don't want to be involved in that. You'll get cut to pieces with people who are trying to, desperately be where they think there's no other chance to be. Obviously, when trends are in motion, like there is tons of locations to define risk and participate. You don't have to be a jackass and kill yourself on levels like this. So DXY, let's look at where he is then, and DXY right at the same level. So Really good level that they across, three of these guys perfectly lined up to find that bounce location. That was a pretty good day. Some of you I know got some good shorts on euros and other pairs. So this level's worth watching to see how you go through it. It's obviously climax and chopping, so it's got significance, and so we watch it just like we watch SMH to clear highs or anything else. We want to see it get through this and then allow it to participate when the level's out of the way. So the dollar still remains weak, and this is the shittiest performance for it in quite some time. That then leads directly to gold and GDX, which was why we kept this on the radar. Like, as much as tech stocks are strong, like gold is fucking crazy. You're at 2050 right now. And if any of you noticed, yesterday, there wasn't a huge amount of fanfare in the media for gold breaking 2000. For as fucking crazy as all the gold bugs are, this should have made crazy headlines. From us in crypto, gold's going to do this, gold's going to do this. And when the dollar crashes, well, gold has fucking just set an all-time high. And the media is not fucking, throwing this up your ass. And that likely means you have more room to run because they haven't fucking full tilted the market about this even happening because there's so much other shit to distract you from. So this guy blowing through here, there's a chance to kind of wave against the level, but the fact gold is through 2,000 right now, highest in history, and no one is screaming fucking "I told you so" from the gold bug side of the equation, is a sentiment read in itself. So trend structure has been solid in that guy. He's done pretty much exactly what he should, and you guys see again the power of following trends, right? Doesn't take a rocket scientist. Nor do you need to know all of the various news stories along this fucking arcs. That's what will fuck you up in the head, right? The price structure contains all of the people understanding multitudes more information than you're paying attention to from the one headline that grabs your eyeballs. So good technicals will put you in the same place as good fundamentals. That's where that saying comes from. So gold doing what he's doing there is obviously the fundamental that is the undercurrent for GDX. And we're on the monthly time scale, so there's GDX, and we go back down. We TA'd GDX, a couple different shows as he left different bull flags, and he's doing that again. So he's up again this morning pre-market. Looks good, Again, I don't do shows every day because there's only so much you can say about a trend that's in motion that doesn't move far enough between shows. So, I can't show up every day just to tell you bullshit. I show up between different days to allow the market to evolve enough for us to evolve our storyline. So yeah, there was the bull flag that we drew, kind of shitty, with my Sharpie pen, and he blew out of that. And obviously, like GDX, contains a lot of guys. It contains both silver and gold miners. And silver, we put this on. I saw somebody said they hit this already, but silver is outperforming gold. Gold should be the guy getting the headline, but silver relative performance wise, he's really cranking also. So there's strength in like miners across the board. Actually, where did I put that? It'd be so bad if I didn't have the chart up. I always forget when I do that shit. Let me zoom out here. What am I on? Daily. So this is a big silver miner. There's a couple of these guys too that are really off the radar. I think this is one. Yeah, First Majestic Silver. But they all look good. They're going to correlate to the basket they're in. One thing I told you guys before, right? Pay attention. There's a lot of these dudes, you're in an earnings cycle right now. So a lot of these dudes are dropping fucking earnings. With the tide that's under metals, it depends how hedged these guys are, whether it reflects their bottom line immediately or not. So many of these guys are hedged. So the direct movement of gold doesn't reflect directly in the price the way you think. It depends, if they're protecting forward fluctuations in prices, that they benefit directly from the movement in gold the way you see it. That's also not widely understood why some of these guys, don't look exactly like the gold chart. But these guys here, silver, they look good. Again, whenever you see this stuff, check the date. Some of these aren't correct on TradingView, so be certain of where the date is. Anything that you play, for anybody who got lucky and accidentally survived an earnings announcement you didn't know was coming, like my ass just pulled off, with a leak on one of my stocks, or just running into a fucking headline that you didn't know was there that you benefited from because you're playing the trend direction. The more information you have, the more sound decisions you make, and you definitely don't want to be caught by surprise by something like this that can absolutely kill you and go multiple times the risk that you plan to define on a gap and fuck up your trading plan. So always pay attention to that, anything we talk about and stuff. some other guys in here, not on the radar as much. These dudes all look great, So as long as Gold keeps pushing like that, be careful. Like if you do see a lot of fanfare come to it right now, there's just not the kind of media attention these guys deserve for what's going on with the big commodity. This dude looks good, having snapped, this fucking weekly level that drove him into the trench. We always like to see that. We always know there's a risk of a chop on it. But structurally, like so much stuff looks good in metals, And this would be the time for gold bugs to have their "I told you so" moment. And the fact that I don't see those guys doing that shit likely means a lot of those motherfuckers got booted the fuck out, because those people are idiots. They would let you know about it for sure if they were in mass inside this fucking trade. So what was the next question? Let me go back up. Let's see. I'm probably about out of time. 8:56. Fuck, that happened so quickly. Shit. All right, KMB explanation. Damn, that's like comes out of nowhere, man. I gotta do a 2-hour morning show, but I know U.S. folks aren't gonna wake up in time to catch the front end. It'll probably fuck you up. I don't want you to have to run into the opening and get caught in the show. So, Kimberly Clark. I think we looked at this guy intraday on like the hourly or something on the show when we did it last. So, yeah, what it does there. So we've drawn this in, just showing the structure of him moving up, consolidating. You can think about this big range here. This is like the 1970s, right? The stagflation for United States, and this is like where Nixon leaves, right? The middle of the shockwave, and everybody's not paying attention as he leaves out to Reagan. You can see it, right? It looks similar. Anyways, use your imagination. So on the last show, we are. Let me come down another time frame. That's what I was telling you. Let him just get clear of the whole thing. You can just define the risk somewhere up here and then just playing, And it's a lot easier. You'll be in the money warp 9, which if you were paying attention right after the show, it was fucking like literally, break up and go. But yeah, we're just looking at the trend structure of what is ultimately shockwaves in series. A trend is just really just a series of shockwaves, and so we're just looking at them as they basically, high volatility begets low volatility begets high volatility begets low volatility, etc. So there's not much to it. It's the same thing you see us doing on all the other shows, just kind of identifying like the larger scale movement, and then kind of like for us, if we're prepping for like the intraday, then we just need to see that the macro is supporting what we want to do in the micro, So that's really it. I don't know what this gigantic fucking, this is me measuring like the possible time duration of the wave itself, how long it could last. And so I told you that he could run possibly to like this vertical August 11th in this particular leg. Could go longer, but for right now, that's kind of just an estimate of time that you have left to participate, and he's waved out. He's up a lot, so be careful if you didn't find your way into it. There's always another train leaving the station, so this isn't the only opportunity in town. But hopefully that clears that up. Good morning. What do you think about the education guy, Chegg? We talked about Chegg before. I'm pretty sure I'm not in the right spot for like the last set of questions, Chegg. I'm just going to cover as many things as I can before I got to sign off with you guys. All these guys that deal with online education are worth keeping on the radar. Like I said, in the state of Florida, the Dade County Teachers Union sued Governor DeSantis and literally forced the state to give us an option to put the kids virtual. Because ultimately the teachers face the greatest risk, right? They're going to be exposed to a couple hundred kids a day until one of them drops dead. Even greater risk than us getting the delivery of each child home. But the teacher is going to be taking all the risk the entire fucking time. So it's pretty good that they did that. And the fact that my son is going to start high school right now virtually, which is like unbelievable to me, having gone to the same high school he's going to go to. Like, holy shit, you're not going to go to your first day of ninth grade like I did. Like, that's insane. But this is like the new normal, and there are parents who are never going to get over what the fuck they saw, this COVID shit. And this will likely cause the kind of sticker shock it did in South Asia when you had SARS. And there are going to be people that pretty much will probably continue to wear masks in everyday society long past COVID if this ever gets solved. So there is meaningful shifts in technological adoption happening along with that. There are people in 50-year-old and 60-year-old age brackets that have had to become accustomed to Zoom and an antisocial kind of life, that this will be a lifestyle that they don't mind. And safeguarding their children will come first and foremost. You have people that probably won't adopt taking a vaccine because of fears along those lines, anti-vax type fears. So I think the fundamentals for more online education going forward, because of risk aversion, is pretty likely. So that fundamental picture underlies like a really great trend structure of lots of these antisocial guys. So Chegg falls into that, an antisocial dude, and they all look quite similar. Can you go into similar change? So I think I covered the KB thing deep enough. Jim Cramer just came out with stay-at-home stocks, right? Jim Cramer's version of antisocial. Thanks for the bits, Desmotron and JLo. I might have missed some people in here. Okay. BTC broke 11.5, very nice. I'm not going to have time to cover defense stocks today, I'm sorry. The explosion in Lebanon, that's a really great point. I wish I'd seen that earlier, that shit. But right now, I guess the going narrative is that the explosion down there is a fertilizer bomb, akin to the thing that took out the federal building in Oklahoma City. The federal building in Oklahoma City, I think, was supposed to be taken out by, 3 tons of fertilizer. And this thing down in the port, they're saying, was 2,700 tons of the same thing. Definitely crazy. It's probably going to take some more time to really be fully certain if it's it was a military strike or really indeed a fertilizer bomb. Again, you have to trust the sources of information you get, and probably once you get some stuff on the ground in Lebanon from people in Lebanon, you'll have a better idea what really happened. So I'm not sure if that warrants the flight to defense stocks as right away. It's a sentiment shift. I don't think Beirut is a catalyst right now for defense stocks just yet. When VR education? Soon, we all hope, right? Okay, I've caught up. Mr. Mojo, thanks for the bits, Chief. Thoughts on Amazon? Biggest retailer on the planet with crazy momentum, the richest man in the world running it. I don't think his fundamentals change much. I think the chances of a breakup risk diminished a lot in the era of COVID. So I think I have my screen up still, right? So this is the last one I can really do. So looking at Amazon, what you're seeing in some specialty retail, online retailers, he's the biggest beneficiary literally on the planet of the stay-at-home order for the world. And he's shockwaving on a breakout right now, blew apart his earnings. His technical picture looks good. His fundamental picture looks good. And the COVID crisis has kind of put a stay of execution in the antitrust breakup fucking conversation. So I think those things are all pretty good for him, as ridiculous as he looks. This is a humongous shockwave he's leaving, right? A humongous range. And you kind of want to deal with the chart, zoom back out. And he has potential to be really crazy. You look at the leg that led him into this consolidation and what he's doing on the way out right now. We have this lower resolution shockwave and a really fucking bullish fucking NASDAQ, Tech looks really good. It's fucking crazy. That's the monthly chart. Right now, you have various sides of tech catching strength. We have that shockwave we're watching on QQQ. You want to see if he actually clears and sustains that this morning. Semiconductors, look fucking really good. Of course, they're relieving. AMD's been fucking full retard. And the other parts of tech are looking kind of interesting, Obviously, there's movement in China. Somebody asked me about Baba last show, K-Web, and some of these guys over here are looking pretty crazy and pretty healthy, and not really on the radar because China has a pretty negative sentiment against them, with COVID and with us, still fighting them economically. But there is definitely stuff flying around in here that's worth paying attention. Gamers and shit like Beely, which are crossovers from the Chinese market, and in gaming. These guys have really healthy structures too that should be paid attention to. That's ridiculous how clean that is. Your Doyus. A lot of these guys look really fucking good, structurally out there. So there's a lot of strength in K-Web. Obviously right now with the whole planet moving online, forced adoption for a lot of older folks going online. Cybersecurity for fucking cloud computing and everything that's moving online is a place to pay attention to. So that's another focus. We'll talk about that probably in the next show. But you look at these guys that track that. hack and cyber are really healthy parts of like tech right now. So security is definitely a thing to pay attention to while the whole world's online. And TikTok is in the news. TikTok being a security risk, whatever kind of wacky shenanigans Trump is doing to strong arm that asset out of the Chinese control, it speaks more to fucking our security online than anything being the greatest risk and moving forward in the post-COVID era. So we'll talk more about that. Probably next show we'll talk more about cybersecurity and stuff like that. So beyond that, that's as much as I can fit into our boys and girls. Hope you guys are good to go and ready for the day. Thoughts on Tesla? I'll do next show. Out of time here. Oh yeah, the channel link. Right. Such a jackass. Out of fucking time, guys. 9:06. You see this shit? I might have to wait till the next show to get you guys a link. No, I'm kidding. I'll get this. I'm a retarded text, so give me a second here. Gonna put a lot more news flow through Telegram. Gonna kind of treat Telegram like an ecosystem more similar to Twitter, and kind of keep track of the news flow, which sets a sentiment base for the population of people we trade against, and something we would want to keep track of, right? Every news story doesn't equal do this or do that, but it's part of the collective narrative that we're all fucking entangled with. Copy link. Twitch. Any second now. Here it comes. What up, Balvini? So there's a link to Telegram. Telegram's crazy. Don't be a troll. All you guys sneaking in from fucking other servers and shit that are getting booted out like jackasses, it's gonna keep happening to you. Stop it. Go get a life. Do something with yourself and stay the fuck out of my channel. Anybody coming in, we expect you to participate. That's what it's about. A bunch of people lurking to see somebody else tell you what to do isn't a fucking ecosystem. So your participation is key. Your perspectives on things are key. Whether you think you know enough to have a perspective or not, you'd be surprised how much you can learn just by bringing something to the forefront of conversation. So hop in. Don't expose personal stuff. Get an avatar. Don't be a fucking egg account. Looks ridiculous. Read the pinned message. A lot of the questions you want to ask about like price structures and ideas and sentiment and psychology, you can find by following it. We want you to actually take initiative. We don't want lazy folks. So go read, and don't make us tell you to go read like 15 fucking times and then ask us a question that's in the material the link like literally points you at, because we're going to be able to tell you didn't read. And just take the steps to inform yourself. Right? We try to build an ecosystem on people that aren't lazy, build a smarter audience, people that do something above and beyond the baseline of the population out there that gets killed every day. So, good shit. Hope everybody learned something good in the show and got some stuff to go forward with. Is that when the hype train gets started at the end of the show? Really, guys? Did you really do us like that? Spirit the Bull, respect on the bits, homie. And whoever just gifted an assload of subs, damn. Blocks, appreciate you, sir. John Sinister X, appreciate you. I think that's it. Out of time, gotta run. Gonna fucking get caught in the opening of the market. And Biggie Smalls, hype train, that's what's up. What up, Biggie Smalls? Respect, Izzy, thanks for the bits. Damn, y'all motherfuckers going crazy at the end of the show. Thanks, Jester. So catch up, guys. Good luck in the markets today. Don't FOMO. Any of you having crazy, ridiculous runs in gold, don't become euphoric and do something fucking stupid behind it. Protect what you got. Take some profits. Let the rest run. Don't give it back. And, good luck. I see you guys on Friday. Peace.
Welcome to Winternomics.eth. Your stream will begin shortly. Loading in 5, 4, 3, 2, 1. Get ready, bitches. Winter. Welcome to Winternomics TV. Your stream will begin shortly.